I'm Charlotte McLeod with investingnews.com, and here today with me is Chris King. He is Senior Vice President, Corporate Services at OTC Markets Group. Thank you so much for being here. Great to have you.
Sure. Thank you, Charlotte.
Really good to be speaking with you today. We've got a number of topics that we want to go through, including several upcoming events from the OTC. So we'll get into that, but I thought we could start by setting the stage a little bit. It's been a pretty interesting year for the mining industry, which is what our audience has a strong interest in. I wonder if there are any key high-level themes that you would pull out.
Within the mining industry, look, we operate the market in the US for non-NASDAQ and NYSE securities, right? And so we've got 12,000 securities traded on our market. 95% of the volume that hits our market is from companies listed outside the US. And so naturally, we work with mining companies who are listed across various exchanges, whether it be in Canada or Australia, South Africa, or in London. We continue to see strong interest from US investors trading in these securities. We actually saw record growth in volume for these stocks over the last quarter. And so, look, we've had more than 65 companies join our market in Q2 this year alone. Some mega cap companies, some billion plus market cap companies within the mining space. So Hemlo Mining from the TSX. We had Stanmore from the ASX. I'd say, look, generally it's not necessarily a mining specific comment, but more just there's a continued trend of US investors looking to invest outside the US. And the fact that we happen to have 400 or 500 mining companies cross-listed on our markets is always good. And so the activity that we see there, I would say the first sort of thought would be we've seen a little bit of a pullback, maybe a bit of a pause in terms of there's a lot of information to digest coming out, right? We're dealing with increased inflation numbers. We're seeing potentially a dovish Fed. And I do think that, there's been possibly some profit taking over the last 6 to 9 months. So I'd say, look, it's interesting times, but I'm feeling really positive about the rest of the year.
It is definitely interesting times. I think that's a great way to describe it. I wonder if you can pull out any more trends in trading activity, perhaps with some numbers from the first half of the year or so.
Yes, so 2025 was a record year for us in a number of metrics, but it's certainly in terms of trading volume. So it's great to see that trend continuing, the momentum continuing. Q2 2026 saw a 37% increase to Q2 2025. So, I mean, it's a significant increase on a record year. So volumes continue to climb. And I mentioned that, more than 65 new companies joined the market. I think from a geographical perspective, and when we think about mining companies, we naturally think of Canada. Whilst we see constant growth coming out of EMEA and APAC, and I think part of that is that we opened an office in Hong Kong just a few months ago. We actually saw 88% growth in the trading volume of North American securities. That's excluding the US. So essentially it's Mexico and Canada. And so, I think from a Canadian perspective, from a mining perspective, our solution just becomes the most cost-effective, efficient way for these companies to open the door for the broader US trading community to access their stock.
So very strong numbers last year and first half of this year. I don't know if you can speak about what could be coming, but how do you see the second half of the year playing out? Do you see that continued strength potentially?
Well, volatility always affects volumes. So I don't know, like I sort of alluded to, there's a lot of information that we need to unpack. And I think the summer typically tends to be a time where perhaps some of that activity seems to cool a little bit. I also think if we're talking about mining, I think a lot of these companies got financings over the last sort of year and a half. And so if you think in these terms, a lot of these companies are now using that money that they raise to go out and do the drill programs. And so I can't predict what's going to happen, but I think it's going to be really interesting in the fall when we start to see some of the results of those programs.
I think you're right. It does seem like now it's time for those companies to start deploying that capital. This is a great overview of the landscape that you're seeing. And against that backdrop, the OTC, as we mentioned, has several events coming up quite soon. I wonder if you want to share details on those and what investors can look forward to.
Yeah, so whilst our main business is operating, well, really providing critical market infrastructure in the US, a big part of what we do from a client service perspective is help companies, once they've joined our market, to just deliver on that investor relations program. So whether it be just getting more eyeballs on the stock or better distribution of the information through the US, that's very much a big part of what we do. Certainly when companies trade on our QX or our QB markets, they will be invited to participate in a variety of events. And so what you're really referring to there, I think this next event that we're hosting next week, 22nd and 23rd of July, it's a 2-day event. It's a virtual event. So virtualinvestorconferences.com allows anyone free access to listen to executives from, I think there's 29 presenting companies. And so, yeah, to be able to listen for half an hour of, straight from the executives and maybe a Q&A session and see the slides and just kind of hear the update from the companies. It's a great way to keep your finger on the pulse of not just what's going on with the company, but obviously on the industry as a whole. So yeah, really looking forward to that.
Well, and we will have the link in the video description in case people would like to join. I was hoping we could go in a little bit of an educational direction today as well, because I think most investors have heard of the OTC. They have an idea of what it is, but they might not understand the different tiers that are available for companies to list on. So it's a little bit of a big topic, but I wonder if you can give me a breakdown of what those look like.
Yeah, I'll try and frame this the best way possible, which is we are the largest stock market in the US for non-US exchange listed securities. So you're correct. I think a lot of people are trading the thousands of securities that are quoted on our markets every day without necessarily knowing who is operating this and how it works in the background. And so we're an ATS, an alternative trading system, and the biggest trading firms that are quoting and trading NASDAQ and NYSE securities, they are also quoting companies who are listed all over the world, but they're quoted in US dollars in our markets on OTC. And so we separate our marketplace into different markets based on a company's level of engagement, their level of transparency, their corporate governance, and their financial strength. And so if you were to look at OTCQX, which is our top market tier, that's typically where you find larger, more established companies. So Anglo American PLC, Impala Platinum, Adidas, Heineken, BNP Paribas, Lufthansa Air, all of these companies, highly reputable, established businesses. And for those guys, they look at the US and they want a liquid, accessible, really efficient market on which to trade. So OTCQX was built for that. It comes with compliance functions like blue sky exemptions across the US that allow the solicitation of the stock and managed accounts to hold the stock. Just underneath OTCQX is our venture market, OTCQB. And if we're talking mining and more specifically Canada, there are over 1,000 Canadian listed companies across all of the Canadian exchanges currently quoted on these two markets. OTCQB, it is for smaller companies with lighter balance sheets, perhaps earlier stage companies. But it's a very liquid market with some of the biggest trading firms like Citadel and Jane Street, Virtu and StoneX that are sort of powering the market with the quotation. And then you have a relatively new market called OTCID. OTCID is not considered a premium market in that it's not recognized for things like blue sky exemptions, but it does allow a company a foot into the US by way of us engaging with the company. We're pulling information from their transfer agent. We're verifying that they're exempt from SEC filing and in good standing. And it's a great way for a company to just distribute their information throughout the US brokerage community. So it's a newer market with less recognition, but there's something there for every company depending on what stage they're in their life cycle.
Great explanation. I think that helps to clear things up. I wonder if you can talk a little bit more about the origins of OTCID. So you mentioned that's a newer one. I think it came about last year. And I believe, so was there a transition there from the pink to OTCID? I wonder if you can explain how that all worked.
I'll try and give you the short version. So if you think about the old pink marketplace, or the pink sheets, as people often refer to it, you're really talking about a marketplace which lacked an awful lot of oversight, engagement, and checks and balances. And so under the old SEC rules, you had a market where a ticker could be created in the US that represents a company that might be listed on a foreign stock exchange. And that ticker symbol could be quoted in perpetuity. And there was a lot of due diligence on that initial review to set up the ticker in the first place. So that was the pink market. And I sort of look at the old pink market, and I say, well, you've got the good, the bad, and the ugly in there, right? You've got bankrupt securities, and you've got mega cap companies, and everything in between. But there was no ongoing review of these symbols, these companies. And so the SEC changed the rule around that, which basically said there needs to be oversight, there needs to be ongoing review of all of these symbols. And so for us, with OTCQX and OTCQB, we're in a good place because those companies are already engaged, and the verification process was already there. We couldn't do that without the engagement of issuers on the pink market. And so that was really what created the OTCID market. And you're right, it launched last summer. We basically created the option for companies who perhaps weren't ready for a variety of reasons to join a premium market, but they didn't want to be sort of pushed onto the periphery, if you like, of being offside with the SEC rule set. And they want companies to have some confidence that even though it's a penny stock or perhaps a smaller company, that they are at least operating within the SEC and the FINRA rules and regulations and the laws that exist in the States.
Okay, so it's a little bit tricky, but I think we can see the process there. I think you did already a good job of explaining how a company might choose which OTC tier is right for them. But I wonder if you can also talk about why a company would choose the OTC versus going to, for example, the New York Stock Exchange or the NASDAQ. How would they make that decision?
Yeah, look, I'll start by saying that NYSE and NASDAQ, they're great stock exchanges. I think this is more of it's an optionality conversation, but it's equally a suitability conversation. And so by suitability, I simply mean that just because you can qualify for something doesn't mean you should do it. If you are listed let's say you're listed on the TSX and you're $1 billion market cap company, and you don't need financing, or if you do, you can raise the money based on your TSX status. If you look at the US and you say, well, I'd love to have the US market, why would you take on SEC filing, Sarbanes-Oxley, another set of reporting, reconciliation with US GAAP? If you look at SEC summaries of this topic, you're spending millions of dollars a year to bolt on a second exchange. And so to answer your question, hopefully I'm going to get there. The US exchange model is a great model, but unless you have a sort of real weakness or a need for financing that you just can't accomplish based on your existing status, taking on all that additional spend and risk, it's the shareholders' money, right? So it's a devaluation of the company. And that's where OTCQX and OTCQB come in. Like if you think about our largest client, Roche, the Swiss listed pharmaceutical company, they're 200 plus billion in market cap, and they've been on our QX market for many years. If you're getting blue sky exemptions and many of the same features and functions that a US exchange offers, for less than $30,000 a year, you get a really efficient market with QX. A lot of these multinational blue chip businesses will never join a US exchange. However, if you are operating a company which is perhaps becoming more US centric, maybe your operations are generally, or your revenues are coming out of the US, and most of your board members are in the US, and most of your shareholders are in the US, maybe through an acquisition, like at some point, then it might make sense to look more closely at a US exchange. So that's kind of the shorter answer.
Makes sense to me. I've tried to bring you some of my key questions about the OTC and questions that I hear asked even around our office about the exchange. But I wonder, you are talking to people all the time. What are some common misconceptions that investors might have about the OTC?
I suppose whether you can raise money on the OTC. And so, that again becomes a sort of an educational conversation around what you can and can't do in the US. So we'll use the Canadian example again. If you're listed on the TSX and you want to involve US investors in a financing, you can do that by way of private placement. But the challenge there for the US citizen is that now they've got a share certificate in a company who trades somewhere else. And so you can't just then go and deposit that into your US brokerage account, and you might have trouble trading it if there's not a US market. So I think the short answer to that query would be absolutely. All of these resource companies that join our markets, they're not doing it just because they like the idea of the credibility of having a QX marketplace, right? They're spending the money to put in place the DTC eligibility, having US market makers to really provide that trading facility to US investors. I think probably the most common query or misconception that I hear quite a bit is that the trading volume, like how do trades settle? If you're a Canadian listed company and you have a US quote, how can I see the trading? And to be frank, it's not always that transparent, because if you think about our business model for foreign private issuers, the market makers in the US are taking order flow based on your US status and your symbol, but they'll often use that ticker to take the trade, but then they might flip the order into the local market, not just in Canada, but it could be for an LSE or a France or Spanish listed company, right? We're sending volume into the home markets. And so often that's sort of a misunderstanding of kind of how to track the success of a QX or QB cross listing or quotation. You have to look at global volume. The only volume that hits our tape on OTC markets is where it's a US to US settlement, which will happen. But ultimately, most companies that join our markets, the end result is a significant increase, about 25% on average increase to global volumes.
Well, very useful to go into those points. And as we are wrapping up, I will let you go. But before I do, I wonder if you have any final thoughts that you want to share with investors, things that are on your mind, or points that we should be watching from the OTC. It sounds like 2025 was a big year. 2026 so far has been big. What should we pay attention to?
Well, I suppose some recent exciting news is that the SEC has proposed some pretty significant changes for small cap companies that want to do financings, and our markets are very much now involved in this. So ATMs, or at the market offerings, it is just a proposal at this point, but fingers crossed, it won't be too long before small cap companies who historically have been excluded from being able to do an at the market offering will be able to do so. So the proposal, it ultimately does two things. The first is it establishes OTCQB and OTCQX as sort of the venues on which you can do an ATM. So that's a significant change for us. But for the companies, historically, you have to have at least 75 million in float to even be eligible to participate in an at the market offering. So the proposal is that that's stripped out, and this could be extremely impactful for those smaller cap companies that just historically have had to work with an underwriter and attach warrants, and it's a lot more expensive for them to raise money. So I would say that's kind of the latest thing to keep your eye on. But yeah, we're looking forward to the second half of the year and continuing to work with lots of new companies.
Well, perfect. I think that's a great place to wrap up. Thank you so much for coming on to share about what's going on the OTC and points we can look forward to. This was great.
Thank you, Charlotte. Appreciate your time.
Of course. And once again, I'm Charlotte McLeod with investingnews.com. And this is Chris King with OTC Markets Group.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.